Hello, friends. If you've been online recently, you've probably seen the headlines. Your social security card is changing. The old paper card is no longer valid. You need to do something right now before it's too late. And if you haven't seen those headlines yet, you will because they're everywhere. Today, I'm going to tell you exactly what is true, what is completely false, and most importantly, what is actually happening with your social security benefits between now and 2027. Because while most of the panic about the card itself is overblown, there are real changes coming that will affect your monthly check in ways most people have no idea about. Some of it is good news, some of it has a catch, and all of it is worth understanding before October when the numbers get locked in. Let's start with the card, because that's what everyone is asking about. The short answer is this.
Your paper Social Security card is not being cancelled. It has not been declared invalid. There is no deadline by which you must do something or lose your benefits. Anyone telling you otherwise is either confused or trying to get you to click something. Your card is fine. What is actually happening is this. The SSA is rolling out digital access to your Social Security number through the My Social Security portal at ssa.gov. This means that if you have an online account, you can now view your Social Security number digitally on your phone or computer instead of needing to find the physical card. For most routine purposes, simply knowing your number is already sufficient. The physical card has always been less important than the number itself. If you want clear, accurate, and easy-to-understand updates about Social Security, Medicare, retirement benefits, taxes, and important government changes, make sure to subscribe to Law Network.
The digital access is an addition, not a replacement. Here's why this matters. Despite the fact that there's no emergency, there are currently 47 different versions of the Social Security card in circulation. Some were issued before 1983 with no security features, no holograms, nothing. Easy to copy, easy to misuse. The digital system provides a more secure way to access and verify your number. A modernization, not a cancellation. But here is the part that is genuinely important to act on. If you have not yet created a My Social Security account at ssa.gov, you need to do that now. Not because your card is expiring, but because of a documented fraud scheme that has been growing throughout 2025 and 2026. Scammers are creating My Social Security accounts in the names of people who haven't set one up yet.
Once they create the account using your personal information, which is often available from data breaches, they can access your benefit records, change your direct deposit banking information, and redirect your monthly payments to themselves. The protection is simple. If you create your own account first, no one else can create one in your name. Go to ssa.gov, click on My Social Security, and set it up. It takes about 15 minutes, and it's free. Now, let's talk about the actual money, because what's happening with Social Security benefits between now and 2027 is genuinely significant. Most people who receive Social Security are familiar with COLA, the cost of living adjustment that the SSA applies to benefits every January based on the previous year's inflation. In 2026, the COLA was 2.8%, which added about $56 to the average monthly retirement check. That was already considered inflation-driven growth by analysts, with tariff policy pushing the adjustment above earlier forecasts.
What just happened this month is that the forecast for the 2027 COLA has been dramatically revised upward. On May 12, 2026, the Senior Citizens League, a non-partisan advocacy group that tracks Social Security policy, raised its 2027 COLA prediction from 2.8% all the way to 3.9%. That is a 1.1 percentage point jump in a single month, which is unusual. Their announcement cited the April 2026 inflation report, which showed consumer prices rising at 3.8% year over year, up from 3.3% in March. The primary driver is energy. The ongoing Iran conflict has disrupted global oil supply through the Strait of Hormuz. Fuel prices have surged, and that is pushing inflation higher across the board. What does 3.9% actually mean for your check? The current average monthly Social Security retirement benefit as of April 2026 is about $2,081. A 3.9% COLA would increase that to approximately $2,162, a gain of about $81 per month.
Over the full year, that's nearly $1,000 more than you're receiving now. Some analysts have gone even further. Independent policy analyst Mary Johnson has raised her 2027 forecast to 4.2%, which would put the monthly increase closer to $87 on an average benefit. If the official announcement in October confirms anywhere near these numbers, 2027 will mark the fourth largest COLA in 36 years. But here is the part of this story that the headlines usually leave out. And it's the part that will directly affect how much of that raise you actually see in your January 2027 check. Every year that Social Security goes up, Medicare Part B also goes up. Medicare Part B is the monthly premium for outpatient medical coverage, and it gets deducted automatically from your Social Security payment before you ever see it. In 2026, while your Social Security benefit went up by $56, Medicare Part B went up by $17.90 per month. That wiped out nearly a third of the raise for the average recipient before it even arrived. The Medicare Trustees report has already signaled that Part B premiums are likely to increase again in 2027. The exact amount won't be announced until November, but historical patterns and the current inflation environment suggest the increase will be meaningful. A 3.9% COLA gain could easily be partially offset by a $15 to $25 per month increase in Part B. That doesn't eliminate the raise, but it reduces it. And most people are not aware this offset is coming until their January check is smaller than they expected. There is one more piece of this picture that could change the math significantly for a lot of people. Last July, Congress passed a law called the One Big Beautiful Bill Act, which, among other things, created a new federal tax deduction specifically for Americans aged 65 and older. Starting with the 2025 tax year, eligible seniors can deduct an additional $6,000 if they are single or $12,000 if they are married filing jointly. This is on top of the standard deduction. To qualify, your modified adjusted gross income must be under $75,000 if you're single or under $150,000 if you're married filing jointly. Why does this matter for Social Security? Because up to 85% of your Social Security benefit can be taxable depending on your total income. This has been the rule since thresholds were set in 1984. Thresholds that were never adjusted for inflation and now capture most retirees. The new $6,000 deduction lowers your taxable income enough that some recipients will no longer owe any federal tax on their Social Security benefit at all. Now, here is the part that is genuinely urgent. The deadline to file your 2025 tax return was April 15th. Most people have already filed. And if you didn't know about this deduction, you likely left money on the table. The good news is that you can fix it. The IRS allows you to file an amended return using Form 1040-X to claim deductions you missed. Tax software companies confirm this exact situation. A senior who filed without the $6,000 deduction is a valid reason to amend. Processing takes up to 16 weeks, but the refund comes back to you. Check your 2025 return for Schedule 1A and the Senior Enhanced Deduction. If it's not there, file the amendment. This is your money, and it is recoverable. Finally, a brief but important point that applies to everyone watching, regardless of whether you are already receiving benefits or years away from claiming. All of these adjustments, the COLA, the tax changes, the increases you will receive in 2027, are calculated as a percentage of your base monthly benefit. That base number is determined by your lifetime earnings record. If there are errors in that record, years where your employer submitted incorrect payroll data, years that show a lower income than you actually earned, or years that show 0 when you were working, your base benefit is lower than it should be. And every percentage increase going forward is calculated on that lower number. One incorrect year of earnings in the SSA's records can reduce your monthly benefit significantly. The way to find and fix this is to open your Social Security statement through your My Social Security account at ssa.gov. Compare the earnings listed for each year against your own records and file a correction if you find a discrepancy. So here is the full picture. The panic about your paper card is overblown. It is not being canceled. But creating your My Social Security account is genuinely urgent because of the account fraud scheme targeting people who haven't set one up yet. The 2027 COLA forecast just jumped to 3.9%, potentially one of the largest increases in decades. But Medicare Part B will take a bite out of it in January, just as it did in 2026. The new $6,000 senior tax deduction was likely missed on many tax returns, but that money can still be recovered through an amended return using Form 1040-X. And the earnings record that determines your base benefit is worth checking because errors reduce every future increase you will ever receive.